I'm really excited to be here talking about CTV. So yeah, I'm Senior Digital Advertising Analyst at the IB Europe. So I'm largely focused on research and market intelligence in digital advertising, mainly focused on ad spend numbers in Europe and globally, and how they're sort of shifting and changing over time, and what do we think are the key trends that are going to be affecting the industry in the future. So I just wanted to start off with a few quotes. We can see here that Philip Schindler, Senior Vice President of Google, said that connected TV is our fastest growing screen, and we think there's a ton of runway ahead. Brands getting the best of all worlds, the precision of digital with the scale of linear, and a lot more relevance. The Trade Desk said connected TV continues to be our fastest growing channel at scale around the world. And Pubmatic said our CTV business, inclusive of OTT, grew more than 6 times over last year, Q4. So that's 2021 Q4 over 2020. So we can see this huge growth happening in the industry. And you can see here that the Trade Desk mentions of connected TV in earnings calls has been continuing. So this just gives you a sample of what in the earnings calls companies are talking about. So of course, it's talking to shareholders about where are the opportunities. And for the Trade Desk, CTV has become a really hot topic where they see growth, and mentioning it a record 53 times in Q3 2021. And similarly, Google, mention of TV and connected TV, you can see has been increasing over time. Alphabet, and you can see privacy here just for a bit of context. They've been talking about TV and connected TV more than they've been talking about privacy recently. And that's because Google are seeing some huge opportunities to win TV ad budgets globally. Of course, they have Chromecast and also opportunities on YouTube. When we start to look at the global advertising market, you can see that Google's total ad revenue globally is actually already bigger than the TV market. It's 190 billion euros. The global TV market is worth 156 billion euros, and with YouTube down at 26 billion euros. That's really important because as Google, of course, are getting excited about opportunities in connected TV, they're also putting money behind that in terms of solving some of the problems that exist in connected TV, which of course will be talked about later, such as measurement and attribution. Just having a quick look at the global CTV market in totality, you can see that global CTV was worth 2.5 billion in 2014. It's projected to reach 18.5 billion globally this year, up to a high of 30 billion by 2026. So this global CTV market is hurtling at a really fast pace. When we look specifically at the European digital ad market, you can see we are forecasting 14.4% growth here at the IB Europe in 2022. Some of these numbers are a little bit outdated for 2021. We're yet to have to compile our full results for 2021, but some of the numbers that are coming through are even stronger than that 28.6%. So we may yet see that number come up. But the main message is that the outlook for digital advertising remains strong in Europe. When we start to look at what are the key growth areas for digital ad spend, CTV comes in at number 2. I've excluded YouTube from the numbers just to show the opportunity outside of that. You can see that only retail media is expected to grow at a faster rate than connected TV in 2022, with CTV forecast at 35% up year on year. And a recent study we did backs that up, a study we did in partnership with Pubmatic, the IB Europe, looking at the key video growth areas over the next 12 months, and connected TV came out as the fastest growing channel. And when we look at the drivers of digital video advertising investment, expanding the reach of TV campaigns, of course, which connected TV can help with, things like better targeting and personalization of video ads are what advertisers and brands are looking for. As we start to look at the European landscape, obviously this is video trends in general, so this is not just connected TV. This just gives you a sample of what's being viewed, right, in some of the key countries in Europe. You can see that Europe's quite fragmented in terms of players involved. There's public broadcasters, there's a mix of paid and free services that people are watching. YouTube coming in number 1. Also got the likes of Netflix, Amazon, Disney+, and of course the endemic local players featuring highly as well. So quick question that I had, and you don't actually have to necessarily answer this, but how many SVOD subscriptions do you have in your house? I've had a look at the number of subscriptions of SVODs in Europe. We can see, and you might be unsurprising to see that it's been growing. The number of households having 3, 4, or 5+ subscriptions has been increasing at a fast rate in recent years, with the number having 5+ SVOD packages quadrupling in the last 4 years. The amount of SVOD subscriptions people have are going up. This meme is American focus, of course, but so it shows you that as well. If you were to have all of the SVODs at the moment, you can end up paying $91 in the US, which is more than they would have originally been paying for cable in the US. And I think HBO Max have been talking about a 3-horse race that potentially only 3 or 4 of these SVODs will win out with the current business models that exist. And of course, not to be doom and gloom, but inflation is rising. We know that the cost of living is going up. We're looking at the Eurozone specifically. You can see here that inflation in March 2022, these are really recent numbers, is at its highest level for a long time. And when we look at country level, of course, that's not just happening in Eastern Europe, it's happening across Europe. And therefore, subscription VODs, of course, may be one of the first place to save money for certain households. And we're starting to see that in the Netflix numbers. Netflix, Q1 2022, lost subscribers for the first time. They lost 200,000 subscribers globally in Q1 2022, and they're projecting to lose 2 million in Q2 2022. Now, if you were to exclude Russia, they would have actually grown in subscriptions in Q1 2022, but US and Canada subscriptions went down 600,000 in that period. So Netflix is starting to see that fatigue of SVODs, saturation of that market, plus the cost of living starting to affect the success of their business model. And CNN and Plus also, there was a new streaming service that recently came out and it shut down in less than a month. Again, with that saturation of SVOD models, there are some other things at play here. There's the news-focused content and takeover that happened, but I think it's a sign of this, perhaps people are not really willing to spend any more money on subscriptions at this point. And what does that mean? There's a big changing landscape. SVODs are bringing out AVOD tiers. So HBO Max in mid-2021, they launched an ad-supported tier. And they also launched in the Nordics at the back end of last year. They just launched in 15 countries in Europe just a couple of months ago as well. Amazon launched IMDb TV in November 2021 in the UK. And they just announced last week that they're changing the name to Freevee, like TV, but Freevee. And they're launching in Germany this year. So they're pushing their AVOD model. ITV have announced ITVX. So ITVX is a new streaming platform that ITV are going to bring out at the back end of this year, which has content available before it's broadcasted, as they look to compete with some of these big players in the subscription market. Disney Plus announced an ad-supported tier, which is no surprise considering they own Hulu, which already has an ad-supported tier in the US, which I'll come on to in a second, and their Asian version of Disney Plus already has an ad-supported tier, and Disney makes around 5 billion a year euros in ad revenue already. YouTube launched an AVOD, so they now have a lot of TV programs available on YouTube in the US. And we've seen, of course, the big news was Netflix launching an ad-supported tier, or at least exploring and potentially bringing one out at the back end of next year, which, considering they've seen the model has already been proven with HBO and others, is no real surprise. An example of how that works in the US already is Hulu, who I already mentioned, is now predominantly owned by Disney. They have 2 main options. You've got the ad-supported plan, which is $6, or you've got the $12 plan, which is no ads. And you can see they promote the ad-supported one as most popular. And some rough estimates that we've pulled together look like that about 67% of users pick the ad-supported plan. And that's good news for digital advertising in general, because the value exchange is much more clear here, right? If you're deciding to have a cheaper plan, then with ads, you've decided to make that decision. Whereas some of the free models, of course, maybe the value exchange is less clear to some people. So what is the potential size of Netflix advertising business? I looked at a crude modeling of what the Netflix business could look like as it stands. Now this is a bit North American focused, but because Hulu is the best example of a hybrid AVOD model. If, for example, all things were equal which is very unlikely, but if everything was equal, so just a crude analysis, right? Based on Netflix's audience size, they'll be making about 5.1 billion in North America, euros in advertising, and that's bigger than Twitter and Snap's advertising businesses combined, just for a bit of context. So that's the kind of general trend we're seeing with potential saturation of SVODs and growth of these AVOD, SVOD models. When we look at the total visual entertainment business in Europe, we can see currently AVOD, as both in relative and absolute terms, is behind some of the other regions. So AVOD makes up 12% of revenue in Europe, and that's because the TV and pay TV and naturally their TV ads businesses have held up stronger in these regions due to, of course, there's differences in pricing models and all sorts of regional reasons for that. We project that will change. The current AVOD market in Europe, therefore, is worth 10.8 billion in euros. Of course, if it was around the 22% mark or 24% mark like these other regions, it would be about double that. So there's about a 10 to 11 billion opportunity there in euros for the AVOD market. When we have what does that mean for the rest of Europe? European broadcasters are still, of course, really key to the European landscape and how that continues to evolve. And when we look at the revenues of a few selected companies of European broadcasters this year, in euros, they tend to have really strong years at the moment, managed to keep hold of a lot of that pay TV and TV advertising revenue and beat the revenues that they had in 2019. And if we look at specifically a couple of different companies, we are seeing them see a lot of growth in the streaming areas. So ITV posted 40% growth year on year, 2021 versus 2022 in streaming compared to their total at 24%. And the RTL group was up 31% on streaming. They're a slightly more SVOD model against 10% in total. But streaming remains a small percentage of the European broadcasters' revenue. And it'll be interesting to see as these US players bring out more advertising support models in Europe, how that will start to shape out. And that will be key to what happens in connected TV in Europe. We're seeing US players operating more in Europe. I already mentioned HBO Max, just launched in 15 countries. Pluto TV, they're an AVOD service in the US. They just recently launched in Italy. They're already available in a couple other countries in Europe. Roku launched its player in Germany last year. Discovery Plus launched in the UK. These are just a few examples of AVOD services from America launching in Europe recently. Of course, it's early days, quite nascent businesses for them in Europe at the moment. But of course, it will be an interesting development. And I'd be remiss not to mention the TV makers. So obviously, I've largely focused this presentation on the AVOD growth, but of course, some of the key players in smart TV in Europe also are the TV makers themselves. Samsung, of course, have Samsung TV Plus, their own platform, an AVOD service, LG, and these TV makers are fastly, pardon the pun, but fastly tying in with new fast TV channels in Europe. So they're enabling the growth of these ad-supported streaming channels happening in Europe. So there's lots of opportunities in Europe for partnerships, both there's threats from competitions, but there's also lots of opportunities for collaboration and partnerships happening in lots of different levels. So there's lots of moving parts, of course, happening. And the other interesting development, and I've already mentioned this a little bit, but retail media, of course, is the fastest growing channel this year in Europe. Here's an example of retail media on CTV. So IMDb TV have shown some ads where you can buy things on Amazon Prime via the smart TV. I think the powering of these new transactional data sets in retail media and the growth that's happening in that industry will naturally also make its ways to connected TV, which in its very nature is connected and therefore interactive and actionable advertising. So those are some of the key trends that we see happening in the industry at the moment. And all this growth and all this change has led to a lot of activity in the M&A ad tech industry. So 2021 was a bumper year for mergers and acquisitions in Europe and globally. We saw CTV really pushing that. So identity, CTV, and the consolidation of the mobile ecosystem were the three key trends that were driving M&A activity in 2021. You can see, for example, Magnite buying SpotX, lots of companies involved here in the space of either SSPs or involved in the measurement and attribution space and targeting within CTV. Q1 2022 saw that trend continue. You can see here a few examples of that's estimated deal value of the purchases that happened in Q1 2022 in the CTV space, like some TV Squared, Video Intelligence, all being purchased, which is really a sign of the interest at shareholder level of CTV. But hurdles to growth, of course, remain. Whilst there are lots of expected growth in inventory available in AVODs globally and in Europe, of course, measurement, and obviously we've got a panel on this coming up later, is a key hurdle to growth at the moment. Obviously, there are efforts underway, but there's still a long way to go for that sort of true cross-stream measurement. There's a fragmented market and ecosystem, which obviously I've already mentioned quite a lot. There's lots of players involved, especially in Europe, in ad tech and different broadcasters, and how they work together to create a scaled CTV ecosystem will be the key to growth of the market. There are still some inventory concerns in certain regions in Europe, like the Netherlands, which has a really high pay TV penetration. Of course, there's the development of the programmatic ecosystem. Direct and programmatic direct are the predominant methods of buying CTV, and budget controllers and expertise in CTV. So who actually owns the budgets, of course, for buying CTV? I think that is changing and improving over time, but has been a challenge so far in connected TV. Of course, the TV buyers buying in a direct programmatic world, or direct programmatic buyers buying in a TV world. And then finally, CTV targeting. There's obviously a real need for sophisticated and contextual targeting, privacy-proof in CTV, which perhaps doesn't currently matured yet. So CTV, of course, is just one aspect of the total ecosystem of walled gardens that existing, of course, Google, Apple, Facebook, Amazon, the challenger gardens, likes of Shopify, retail media with Carrefour. So there is that real need at the European level to coordinate and build this scaled ecosystem. So that's almost it. So the key takeaways really from this analysis is that connected TV is a key growth area on Wall Street. We see that with the mentions and earnings calls at Google, the Trade Desk, and among many other companies at the moment. It's a real key area for shareholders and investors. The AVOD market, or the hybrid subscription and ad support models, are really expected to flourish this year and in future years. Potential saturation in SVODs coming up, and the challenges on the cost of living. M&A activity, obviously I briefly mentioned there, but are really a sign of the opportunities and challenges that are present in the ecosystem at the moment. And of course, the fragmented nature of European landscape, which means there's a real need for Europe-wide collaboration for a scaled ecosystem.